Welcome back, everybody. I am Chris Sevigny with Sevigny Mortgage Note Investments, and today we're going to do another video on case studies. And if you missed the last video, we were discussing some of the assets we were looking at, about a $60 million list of assets for sale, 500 plus or minus assets on that listing, and we were highlighting some of the assets that we found that we did not pursue. Today we're going to talk about some of the assets that we're definitely interested in pursuing. First, before we get started, of course, the standard disclaimer, past performance is no guarantee for future results. I am not going to read this entire disclaimer to you, so please, if you need to, pause and take a moment to read. So in our past video, we did talk about the 3 Ps. We talked about the property, because that's important, because that's what secures our investment. We talked about the person, the borrower, what is their terms for looking to negotiate and work something out. And finally, the predicament, what got the borrower in that situation, to develop our 3D model or 3D picture to understand the entire situation. And the assets I'm going to show you today, we're going to focus on the property. And we're going to focus today, the first one is a nice brickfront property, grass is mowed, minimal landscaping. The borrower owes about $75,000 on the property. Property's got a valuation of roughly about $100,000. Their principal and interest payment, their monthly payment is $725. Rent is much higher in this area, and it's a low crime area. One of the things you might be thinking is, what's the importance of the rent versus their payment? Well, if you put yourself in borrower's shoes, they have a property that has equity, and if they're in default and they have to go move and rent something, the rent's going to be $400 plus more a month in their payment. So if they need to work something out on the 725 or get caught up or restructure the loan, it's much easier for them to work that than to go move somewhere and pay $1,200 a month. So that's one of the things we like to look at and focus on as well, because it allows us to put ourselves in that borrower situation of, in this instance, it makes every indication that the borrower would want to keep this property because it's got the equity, and they can't move somewhere else for less amount of money. So another asset, and this one that actually we recently acquired as part of the portfolio, the unpaid balance is $125,000. The borrower has valuations of roughly about $500,000. They're paying a little over $1,200 a month. Again, low crime area. Principal and interest payment is less than rent. This one, there's modification that got worked with the borrower, and now we've got the borrower paying on a monthly basis. And the borrower actually renovated this property on the inside. It's a borrower who has outgrown, I'll use the term outgrown the home, in the sense of the borrower doesn't need a house this big. So the borrower is actually looking to liquidate and sell the loan or sell the property, which would then get us paid off. And by buying at a discount, that would enhance our returns. Again, third asset, cute little, I'll call it Cape Cod style house. Lawn is maintained, landscaping in the front. Again, house looks like it's being cared for. So these are types of properties that, because we can't see the inside, we can do a lot of judgment based on the outside of the property. Now, it's not in every instance where the outside and inside have a reflection of each other, but in the majority of cases, it is. Other things we look for is, people flying, flags on the property, decorations around Halloween or the holiday season, because people take pride and enjoy that sense of it. It shows that they, love their home or really want to keep their home. Again, another situation where equity in the property on this one, and again, that payment is lower than rent. That's something we see a lot of over the last 5-6 years, when mortgage rates were down 2 to 3% and rent continued to grow. As mortgage rates have ticked up now over time, you'll see those payments go up. On the flip side, though, rent in most areas has also skyrocketed. But it is something that we monitor and we look for, and it gives us an idea for being able to work out borrowers, because in most instances, if they can live cheaper and stay in their house, they're more willing to negotiate and work out a modification, which turns into a win-win situation for both parties. So thanks for watching this video. If we can be of any further assistance, please reach out. We're happy to talk to you about our latest Regulation A+ offering. You can call us at 805 410-8577, or reach out to us at invest@7einvestments.com. So thanks for watching this video and enjoy the rest of your day.